Hi, everyone, and welcome to this presentation. The title is Applying Fibonacci Analysis to Charting. So we are going to talk about Fibonacci. We're going to try to break it down in simple terms so that you can understand where the percentages come from, where the calculations come from, and all that stuff that's built into the TradeStation platform. But before we get started, let's take care of some introductions. My name is Jesus Nava. I'm the Director of Education at TradeStation, and it's always a pleasure to do these presentations for not only TradeStation users, but anybody that's interested in trading. There's a collection of drawing tools in TradeStation that follow the Fibonacci methodology, and it's important that we all understand how to use them, how to apply them, how to draw them, and how interpret them. We won't go into a lot of interpretation because I think there's a lot of subjectivity in how you interpret Fibonacci lines. And I want to, encourage everyone to do their own analysis, to do their own interpretations, because what works for some traders may not work for others. And it's important that we all develop our own methodology of analysis, okay? So before we get started in today's topic, let's go through some of the disclosures. Keep in mind that every symbol and idea that I talk about in this presentation is going to be for educational purposes only. It is not a recommendation of TradeStation. Also, that active trading is not suitable for everyone. And anybody that's trading options or futures needs to be aware of the risks. I'm sorry if you hear my daughter in the background. Sometimes she just goes on a screaming rant. So, and also, past historical performance is no indication of or guarantee of future results. Anybody that would like to read more about these disclosures, please make sure that you visit our website, tradestation.com. All the disclosure information is there. I'm very excited to be here, and let's go ahead and get started with the Fibonacci presentation. Okay, before I talk about Fibonacci, I want to make a parenthesis here and talk about what is it that TradeStation is working on in the area of education. Recently, TradeStation established this education company called You Can Trade. And at You Can Trade, TradeStation is hosting two different channels. Getting Started with TradeStation, which is a channel that talks about all the different platforms that TradeStation provides, including the desktop, web trading, mobile app. And we do weekly classes in there and give you opportunities to ask questions in a live setting, specifically Wednesdays. So if you haven't had a chance to join us at You Can Trade, I want to invite everyone to visit the Getting Started with TradeStation channel. It's totally free. And that way we can interact with each other, on Wednesdays. So make a note of that. Go to youcantrade.com and look for the Getting Started with TradeStation channel. Now, once you're ready to take your TradeStation education to the next level, we are hosting the TradeStation Masterclass. It is a premium channel, but we have courses not only on technical analysis, but easy language programming. We do daily live sessions, so you can connect with me every single day. Platform training is one of the big things inside of the TradeStation Masterclass, so that you have a good handle on the TradeStation technology, and everything is archived. So if you can't really make a live session, no problem, because you can always watch the playback of the video. And of course, we have multiple sessions that are open discussions about anything you want to talk about. So I like those a lot because you are the ones who drive the topic of conversation. And if you're looking to do something specific on TradeStation and you haven't had, the help that you're looking for from the TradeStation support team, these are opportunities for you to get things done on your TradeStation platform. So make sure you visit us at You Can Trade, both channels, Getting Started with TradeStation and TradeStation Masterclass, at both products of TradeStation, and please check out the content there. Let's go ahead and get started. Who is Fibonacci? Fibonacci is the nickname of Leonardo Pisano, an Italian mathematician born in 1175. So yeah, Fibonacci, the concept, has been around for centuries. Fibonacci explains the connection between the golden ratio to the number sequence that takes his name. This golden ratio is an idea, or it's a concept that explains that everything in nature has the same mathematical proportions. And this goes on everything that you can think of. You know, if you just search for the golden ratio using Google, let's Google golden ratio, you're going to find so many examples in nature that follow this perfect proportion. Like, for example, sunflowers. The sunflower seeds are arranged in a manner that are proportionally perfect. The same goes for snails or even the human anatomy. When you think about, the distance between your shoulder and the tip of your finger, and then the distance from your elbow and the tip of your finger, that proportion and that percentage follows that golden ratio as well. The same goes, for example, if you're thinking about the distance of the top of your head to to your toes, and you think about the distance from your belly button to the top of your head, that ratio also conforms to the golden ratio. So just, if you haven't done so, go to one of these search engines and type in golden ratio and take a look at all the different examples that exist nowadays in the world that follow this golden ratio. Well, Fibonacci, explains this number sequence that follows that same golden ratio, and that's where the Fibonacci number sequence comes from. The number sequence is going to start with 0 and 1. He adds them together, and the result is added to the sequence. So 0 plus 1 is 1. So the sequence now becomes 0, 1, 1. Then he takes the last two digits on that sequence and adds them together. So 1 plus 1 equals 2. And the result, he adds back to the sequence. So now the sequence becomes 0, 1, 1, 2. And we follow this process for infinity. So the last two digits, if we were to continue on, the last two digits on the short sequence that we have here are 1 and 2. So you add 1 plus 2, you get 3, and 3 gets added to the sequence. And you can see a kind of a sequence right here at the bottom. And if you notice, we're just doing that, taking the last two digits of the sequence, adding them together, and the result is added to the sequence itself. And you can see the relationship between these numbers, and it goes on to infinity. Right here on the sequence, I made those additions to 233. But if you were to come up with the next number after 233, what is it that you need to do? You need to take 233, add 144, which are the last two digits on this sequence, and whatever number you get, which would be 300 and 77? 377 would be the next number on the sequence. And you do that until infinity, and you come up with what's labeled the Fibonacci number sequence. Now, the Fibonacci number sequence is just that, a number sequence. From there, we develop some analysis based on percentages, and that's what we really base, our technical analysis or trading technical analysis on. Where do we get percentages from, though? So how are Fibonacci levels calculated? And this goes for any Fibonacci drawing that you see on any chart, because you're going to see these percentages. Where do they come from? Well, the Fibonacci levels are derived from the Fibonacci number sequence and the proportions between the numbers. Now, you're going to find that these proportions are amazing. Let me give you a few examples. You're going to divide any number by its preceding number, and you get the golden ratio, or 1.618. That's the proportion that is considered the golden ratio. And it's impressive that when you take the number sequence that has the Fibonacci name, the golden ratio is present at every single mathematical point. And it's impressive that almost everything has these dimensional, proportional properties, and they all adhere to this ratio of 1.618. Let's go ahead and take a look. I'm going to go back here to my previous slide and take a look at the number sequence right there at the number. Where do we get this 1.618 from? Well, as I said earlier, let me pull up my calculator so that we can see exactly what we're talking about. We're going to take the 144, well, in this case, the 233. Let's take the 233, and we're going to divide it by the 144. See the number right here, 1.618. That is the mathematical formula which represents the golden ratio. Now, do you guys remember the number that follows 233? We worked it together. So we added 144 to 233. What number did we come up with? With 377. Let's take 377 and divide it by the previous number in the sequence, which is 233. If we do that, take a look at the ratio, 1.618, and it goes on and on. As you go deeper into the sequence, you're going to get closer to this golden ratio, which is not so much at the very beginning. So if you try to, do the math on the very first numbers in the sequence, you might get, numbers that are a little bit off. But as you go on deeper into the sequence, it's impressive how close, they all get to 1.618. For example, I'll give you an example. If I take for example, the 34, which is part of the sequence, and I divide it into 21, you get something close to 1.618, but not quite. And as you go, to the very beginning, you're going to see some very major differences in that golden ratio. But it's impressive, and you may want to do this for a few numbers deep into the sequence, how close they become to 1.618, which is the number that is considered the golden ratio. All right. All right. Let's go ahead and take a look at some other, by the way, this is all being recorded and it's going to be available later on. Give us a couple days before, until we actually process the recording and then upload it to our website, okay? So yes, division is what's going to give you this golden ratio of 1.618. Other significant ratios, and this is where the whole Fibonacci levels come from, is dividing one number by the next number, which yields 0.618 or 61.8%. Dividing one number by the second number to its right results in 0.382 or 38.2. And dividing one number by the third number to its right results in 0.23 or 23.6. And guess what? These percentages that you see here are exactly the percentages that are represented by any Fibonacci drawing tool. So let's go back here to my Fibonacci sequence and let's pull up the calculator so that we can do our own math. So, that's not the calculator, that's Notepad, and I'll bring it up again. So calculator, and let's pull up the PowerPoint. All right, so let's say, for example, that we take the 55 right here, part of the sequence, and we divide it by 89. That gives you 0.617 or close to 618, which is the golden ratio. Remember that if we use numbers that are deeper into the sequence, that's when we get closer to this golden ratio. In fact, let me go ahead and go one number deeper so you see what I'm talking about. Let's take the 89. I take the 89 and I divide it by 144. And what number do we get? 0.618. We can turn that into a percentage, which is 61.8%. And that is a precise level of the Fibonacci drawing tool. Now let's take one number ahead. We take the same 89 and we divide it by 233. And what number do we get? 0.381 or 38.1%, which is another significant level of the Fibonacci drawing tool. And next, you can do one more. Let's take the 89. It's not here, but we know that the following Fibonacci number of the sequence would be 377. If we take the 89 and we divide it by 377, then we get this number, which is 23.6, which is exactly one of the percentages that belong to the Fibonacci drawing tool. So that's where the percentages come from. It's all derived from the Fibonacci number sequence. Let's go ahead and take a look at some other information here. So that information is here for you to know exactly where the Fibonacci levels come from. But why are they important? Well, The Fibonacci has been around for centuries. It was taught by Fibonacci in his day, and technical analysis adopted these Fibonacci levels are significant levels that should be followed. If nature overall, and we go back to the concept of nature and how it follows these proportions, we talked about sunflowers, we talked about snails, we talk about the human anatomy. If everything in nature follows these perfect proportions, why can we not apply that same concept to technical analysis and price movement? And even if it doesn't apply, there are so many traders that are following these levels, which are important Fibonacci levels, that you are going to get a reaction whether you believe on or you believe in the Fibonacci levels or not, because it's being followed by many traders around the globe. So these are important levels to watch, whether you believe in Fibonacci or not. A lot of technical analysts believe that the Fibonacci levels are voodoo science, and discredit, the importance of this. But sometimes, you'll be amazed at how you can draw a Fibonacci tool on a TradeStation chart and see how the market just follows those lines and how it bounces back and forth from these important levels. I find that to be amazing. So there's some value of knowing how the Fibonacci came about and how we can apply it on the TradeStation platform. By the way, what you see here on this slide, these are all the Fibonacci drawing tools that you can use on the TradeStation platform. We have retracement lines, we have the extension lines, we have a calculator, some speed resistance variations of the Fibonacci, and some cycles. Let's talk about each one of them so we know what is it showing us and how we should draw it on the chart. Let's take a look. Let's go here to the next slide. Let's talk about the Fibonacci price retracement lines. By the way, the way that we are going to present these tools are in a logical order. When you go to the menu, which is the drawing menu inside of TradeStation, they're going to be sorted in alphabetical order, which is not the same order that we're going to do the PowerPoint, or it's not the same order in which your PDF was saved. Let's talk about the Fibonacci price retracement lines. They use horizontal lines to indicate areas of support and resistance. And yes, I mean, if you don't believe this, just draw the Fibonacci retracement lines on some charts, and you're going to be amazed at how the price activity sometimes balances beautifully out of some of these price levels. Levels are calculated using the high and low points of the chart. Now, this particular radio button that you read here, that says that they're calculated using the high and the low points of the chart. It's going to require for you to identify what these high and lows are. There's no right or wrong answer. You have to look at the chart and find a peak or a trough that you can use and draw these retracement lines, because that's usually the way that these retracement lines are pretty much drawn. You look at the chart and you find some significant areas where there has been a reversal in price, and these are the peaks and troughs that are going to be used in drawing your Fibonacci retracement lines. 7 horizontal lines are drawn at levels aligned with the Fibonacci ratios, starting at 0%, 23.6, 32.2, and 61.8. Let me just skip a few here. So we have the 23, the 38, and the 61. These 3 percentages are the same ones that we saw when we were using the calculator at the beginning of the presentation. Just take the numbers in the Fibonacci number sequence, divide, the numbers that are next to each other, and then skip a number, and then skip 2 numbers, and you get exactly these percentages that are here. 23.6, 38.2, and 61.8. In addition to those, we have the 50%, which is a significant level. That's a 50% retracement is something that we should all watch. That's why it's added here. And then the 76.4% is just taking the 23.6 level, which is the very first one, and subtracting it from 100. So it's just doing the inverse of that first level and giving you a 76.4. And the 7th line is going to be your 100%. By the way, when you draw the retracement or this price retracement lines, you have to pick point A and point B. Point A is going to be your 0% and point B is going to be your 100%. So you are the one who is identifying those two levels, and then the Fibonacci percentages lines are going to be drawn according to your measurement. Let's go ahead and take a look at that on the chart, and I'll show you how you can draw it. Let's go here to TradeStation and open up a chart analysis window. Here we go. All right. Let's resize this, and let me turn this into a daily chart. Let me disable account orders and positions. Let me use American Airlines for this example. Okay. Now, the Fibonacci retracement lines, you can draw them at certain time periods. If you're analyzing historical time periods, that's okay. You can draw the Fibonacci and see how the market reacted in a particular historical period. But you can also draw the Fibonacci on new data, on new candlesticks, and see what are the potential support and resistance levels going forward. That's an interesting concept. Let's say, for example, that I want to measure the uptrend from this low point up to this high point. In fact, let me squeeze the chart here so we can see it better. Okay, so from this low to this high. I'm not going to pick this other prior low because there was some indecision in the market over here. There was kind of a consolidation period, and then we made a low here, and then it started going up. We have some sort of a small correction here. It wasn't quite as distinct, so I'm going to consider this to be an uptrend. But I'm going to take this low, which is a trough in the market, and I'm going to take this peak over here. So I'm going to go to the drawing menu, and I'm going to go to the Fibonacci price retracement lines. This is the one that we are analyzing right now, price retracement lines. And I'm going to, well, in addition to selecting the tool, one thing that I like to do when I draw these Fibonacci drawing tools is to do snap mode. I'm not sure if you guys have used snap mode before, but snap mode allows you to attach to price points on a chart. And if I'm trying to pinpoint the very low of a candle or the very high of another candle, snap mode is going to be my friend because it'll automatically attach to it. So I don't have to be so precise in my clicking. So yeah, sometimes it's going to be a pain to use snap mode, but some other times it's going to be a lifesaver. So I'm going to turn it on for this example. And notice that I just have to be within the proximity of the low of this candle, and my Fibonacci will attach to it automatically. I clicked once, and now I just move my cursor to the peak right here that I was referring, and take a look. It automatically attaches to it. So it's going to be helpful when you want to draw something from a specific price point on the candle. Let me click here, and there it is. We just drew our first Fibonacci tool. Now take a look at the way that the percentages are assigned, because point A is assigned to 100% and point B is assigned to 0%. Why is it backwards? Should it be from 0 to 100? This one is from 100 to 0. Just remember that these are the Fibonacci retracement lines. So even though we may think that it should go from 0 to 100, what we're measuring here is how the prices retrace from this measurement. So if we go from A to B, B being the highest point in our measurement, we want to see how the prices retrace from that in percentage. So that's a starting point, pretty much. That's our 0 point. So you can see that when it reached the 23.6%, it didn't even slow down. It actually broke that level without hesitation. And it did that, for all the different levels of the Fibonacci until it reached this right here, 0. Like, take a look. At 0, it kind of bounced up, and it actually, kind of tried to break it, but it didn't. It kind of just bounced up again, and it's just giving us a sideways movement from that moment on. But you can see that it's very interesting how we can draw these levels and then start analyzing it, even if it's a historical period that we just did right here. If you wanted to have another example, let me show you. Let me remove the drawing or the Fibonacci retracement lines, If you were analyzing more recent data, let me open up the chart here a little bit. And let's reset the scaling. Let's say, for example, if we're looking at this sideways movement, we see, the price kind of going on an uptrend for a few days, then it corrects, then it goes up again, then it corrects, and then it goes up again. Maybe you want to measure this, maybe you want to measure in comparison to this movement over here. Maybe so. So again, drawing Fibonacci retracement lines. We go again, I have snap mode selected, so I go from this bottom to this top, and there we go. The Fibonacci retracement lines are done. As you can see, when we measured here, the price retraced down to almost the 76.4%, not quite, didn't reach it. It actually, touched the 61.8, kind of bounced back up, and you can see that now it's touching that 100% one more time. So the bouncing and the breaking of the lines, you're going to see that is significant. Going forward, yes, it would be very valuable just to keep an eye on these levels that everyone's watching. And of course, there's going to be some reaction at those levels because everybody thinks that they're probably going to be support and resistance levels, or things are just going to break and continue on the same direction. All right, so let's go ahead and take a look at some other information here. Okay, let me remove these Fibonacci retracement lines. Let's go back to my PowerPoint and take a look at the next tool. The Fibonacci price extension lines. This is an interesting one because the price extension lines adds a different component to the measurement and how you can project it into the future. Let's see. Very similar to the Fibonacci price retracement lines in the number of levels, but requires a third anchor point to draw. The Fibonacci retracement lines, what we did is we went from point A to point B, measured from 0 to 100, and then it pretty much drew all the different levels that we needed for the Fibonacci analysis. Here, we're going to take the same measurement from point A to point B, but then it's going to require a point C, because that measurement that you took from point A to point B is going to be projected from the point C that you click on. You'll see exactly what I'm talking about when we draw it on the chart. So let's see. This is retracement lines. Sorry about that. So these are price extension lines. The extension lines are trend-based, and they're calculated from a retracement point. They're used to monitor support and resistance levels, as well as breakout price activity from a specified retracement level. Let's take a look. Let me go back here to a chart. All right. And what we do, we measure a certain level. Let's say, for example, we're looking at these few days of uptrending on American Airlines. Let's suppose that I'm going to draw in, and I select the price extension lines. These are the Fibonacci price extension lines. And what I do is, again, I go from a low. You can also go from a high to a low. That's totally fine. But you go from a low to a high, and then you bring it down to a low. So this time I'm going from low to high, and then I'm creating an anchor on a low. But you can also go from a high to a low and then anchor it to a high. What we're doing is that we're measuring this uptrend from point A to point B. This measurement that we take at the very beginning of the Fibonacci price extension lines is what is drawn right here between 0 and 100. So if you were to take a ruler and measure point A to point B, it's going to be exactly this distance from 0 to 100. Well, what this is doing is projecting that measurement into this low, from this low, and is projecting those Fibonacci lines into this correction that happened for American Airlines. Okay, so let's go ahead and take a look at the next drawing tool, which is the Fibonacci retracement calculator. Oh, one thing, how can you add more Fibonacci choices into these indicators? That's a great question, Pamela. Thank you for reminding me. If you're drawing something, let me go back here to my drawing, and let's do the Fibonacci price retracement line. This is the retracements. And I'm going to do it from this high. I'm going to do it from high to low now. I'm going to do it from this high to this low right here. Okay, take a look at the percentages. Now 0% is at the bottom. We can see that in this downtrend, there was a retracement of about 50%. Take a look at that. Now the 50% line was significant in this example. You can see how the prices kind of touched the 50% and then bounced back down. So that's interesting. Now take a look at where they're bouncing off from. They're bouncing off from the 32.2. That's where they bounced off from. And take a look. Now they're touching the 0 line again. So will it, bounce off of that 23.6 again? Will it break it and go back to the 38.2? Of course, we have to we have to take a look at other studies and indicators to have a more robust and a more confident trading signal. But this is really interesting to take a look at. Now, to add more levels, all you need to do is double click on any of its lines, and you come over to this dialog that says Customize Fibonacci Price Retracement Lines. You may also right-click on any of its lines. And sometimes, if you don't right-click exactly where the line is, you may miss it. But what we're looking for is the Edit Fibonacci Price Retracement Lines. And you can see right here that you have the ability to enable more checkboxes and add more lines. For example, if you wanted to do the 123.6 following, the Fibonacci, or if you wanted to do also the 161.8, which is the other, Fibonacci level. If you do that and you squeeze the chart, you can see those additional levels right here on the screen. So that's the way that you add more levels. And you can adjust the, the thickness, you can adjust the transparency, you can adjust the colors, anything about the Fibonacci can be formatted. In addition to adding alerts, so if you want to be alerted when any of these lines are touched, or whenever any of these lines are broken, you can just do the same thing. You can double click on any of its lines, and in this customized Fibonacci dialog, all you need to do is click on alerts and enable the alert. And that way, whenever the price activity touches any of these lines, you would be alerted. One thing to keep in mind is that if you're going to have an alert set up on any of these Fibonacci tools, you have to leave the chart open somewhere so that the Fibonacci can work on it. If you take the chart and you change the symbol, of course, you're not going to have the Fibonacci there anymore. So it's important that if you set up an alert, you just take this chart and leave it somewhere open inside of your workspaces so that it gives you an alert when it's time. Let's take a look at some other tools. Let me go back here. Let me remove the retracement lines. We were about to talk about the Fibonacci retracement calculator. It's used to examine price movement in trending markets. Retracement assumes that the price of a security will rise and fall many times before continuing a major trend. And these price fluctuations are known as corrections. Price corrections often retrace prior trends by specific percentages. This is known as a percent retracement. So if you want to price retracement calculations help identify buy and sell opportunities and provide support levels for a market. If you want to use the retracement calculator just to measure how much something has retraced, that's something very helpful. If I go over here to my TradeStation platform, let me reset the scale here. And let's take a look at a retracement. Let's suppose that we're looking at this downtrend, and then again, the market activity retraces back up, and we want to know how much it retraced by. All you need to do is use the calculator. So let me go to drawing, pull up what's called the Fibonacci price retracement calculator. Okay, and what I do is I'm going to go here from top to low, and then click here on the top here. So that generates a calculation. So you have to click 3 times. You have to click the starting point, which is point A. It can be a top or it can be a bottom. Then you need to go to the retracement level, or at least no, not to the retracement. You have to go to the very top and then go to the very bottom, and then you have to go to the retracement level. So that's point A to B to C. So what this does, it calculates how much that retracement is, and you can see the percent retracement right here is exactly at 50%. I think we had already established that when we drew the retracement lines. We knew that when the price hit this bottom and it retraced, that was exactly 50%, but the calculation is just confirming that. It's giving you a 50% retracement. Price 1, price 2, and price 3 are exactly the prices that you clicked on. So the very top is 2604, the very bottom is 1828, and the retracement level, which is the third point that I clicked on, is 2216. So based on those calculations, we have a 50% retracement. And between price 1 and price 2, we have all these other different levels. Price 3 is 2216, but if the price, goes to 2345, which is right here at the bottom, that would be a 66.6 retracement. It would have needed to go to 23.08 to have hit the 61.8 retracement as well. So it does give you additional levels in the form of prices that could be used as different profit targets or stop losses if you want to use them in that way. These are the Fibonacci time extension lines. Now, instead of just going vertically on the chart, measuring price as it goes up or down, now we're going to measure price horizontally as time. So it uses vertical lines to identify time zones instead of horizontal lines like other Fibonacci tools. The chart is divided into segments with vertical lines that are spaced apart in increments that conform to the Fibonacci sequence. So the increments are at 1, 1, 2, 3, 5, and we're going to see that on the chart as we draw it. So it's using the same Fibonacci number sequence, and it's going to space the bars based on what you supplied. So let's go ahead and take a look. Let me go here to my TradeStation. Let me go here to drawing. I'm going to go to the Fibonacci time extension lines. So again, it's going to require you to click on 2 different points. I'm going to click on point A and point B. Let's go ahead and take this big drop down in price. I'm going to go here and click on this top, and then I'm going to click on this bottom. All right, so take a look. You may have to add spaces to the right. Whenever you project something into the future and you don't see enough chart here on the right-hand side, you're going to have to manually tell the chart, hey, I want to have more space to the right. Notice how I don't see anything here on the right-hand side. It's because I don't have enough space by default. Now you fix that by double-clicking on the background, going to settings. No, wrong window. Background right here. Double-click on the background, go to the general, and here you have space to the right. I'm going to set my space to the right to 100 while I finish off this, Fibonacci analysis. I'm going to click OK, and there you see more of the lines of the Fibonacci. What I wanted to show you is that the measurement that we took from point A to point B, again, that's my 0 to 100. But instead of drawing it vertically to identify or analyze price, now it's drawing it horizontally. And you can see that we have the 0 line and we have the 100 line right here. So that same distance in time is projected into the future. Does that make sense? These are the time extension lines. Now, let me go back here to my PowerPoint, because this is using the percentages. So it's not really using, these numbers as factors or proportionate to the number sequence. It is actually using the same percentages of the Fibonacci. So as I said earlier, the measurement that you took at the very beginning, that's just 100%. And then 38.2% would be a chunk of that timeline, from 0.0 to 0.100. And it's just going to align your Fibonacci levels in a horizontal pane to show you time instead of price. We're going to take a look at some other Fibonacci tools that combine the two concepts of price and time, which I find very interesting. But this is something really cool, because as you draw these, you're going to find that at certain levels of these Fibonacci, something interesting is happening. I'm not sure if this is a coincidence. Maybe it is. But take a look at, once we measured from point A to point B, yeah, the price continue on. But notice what happened right here at the 38.2. We had what is clearly seen as a downtrend. We had a few days of market just dropping, and all of a sudden a reaction. So are we looking for reactions at these time levels? Maybe, as I said at the very beginning, if you're not really a believer of the Fibonacci, but you know that there's a lot of people and a lot of traders following this tool, and maybe there's some value of just adding it to the chart, and just be attentive and just be watchful of what's happening with the price activity at those important levels. Each line indicates a time when a major price movement is possible, is what it says here. Let's go to the next one, which is the Fibonacci speed resistance arcs. This is the very interesting one, because it combines the two concepts of price movement and speed, how long it takes, so time and price. It used to determine the direction and speed of a trend reversal, as well as support and resistance levels. The way that we draw it, let me go back here a moment. I was using the wheel and I went a little bit too fast. You draw a trend line, and the arcs are drawn based on distance percentages between the beginning and the end of the trend line. Arcs not only detect trend corrections, but also measure the speed of a trend, the rate at which a trend ascends or descends. And arcs can indicate support and resistance levels as well. So how do we draw this? And how is it calculated based on the Fibonacci levels? Let's take a look. Let me go over here to TradeStation, remove this time extension lines. Let's delete. And let's draw Fibonacci speed resistance arcs. I'm going to go again from this top to this bottom. Take a look again. That movement from point A to point B, that's my 100%. Then you can see these arcs being drawn, similar to what happens when you draw arcs using a compass. You just find a specific point that you draw around. This is exactly how these lines are drawn. But the lines are drawn at Fibonacci levels. Take a look at the very first line on this trend line is at 38.2%. And it just draws a circle around it. It is expected, for the price to do something at these levels or just break it all together. Take a look at what happened at the 61.8 level. There was some hesitation on the price activity. The price kind of bounced off of that level, but then it just continued on. Okay. Is this something that we should watch? These are different variations of the same concept, and it does combine not only the price movement, but also the speed at which the price moves. If you need to squeeze the chart a little bit just to see the other levels, just do that by dragging the scale here on the right-hand side, and that way I can see the other levels playing out. You can see that from zero or from point A to point B, that's my 100% line. And take a look at how the price activity is just moving along on all the other levels. Now, can you add more levels to this? Of course, just double click on one of its lines and you can add more arcs if you wanted to do so. Okay, and all the tools here are based on the Fibonacci, so they're all equally important. Which one is the most used? The price retracement lines. That's the one you see everywhere. That's the one that people use the most. We have all these different variations because sometimes you may want to analyze not only how far the price is moving, but also how fast is the price moving. Are the movements happening when the vertical levels are reached or when the horizontal levels are reached? Because they're all based on the Fibonacci sequence. But if you're talking about popularity, the one that is most popular are the retracement lines. This same concept of speed resistance is also available in the form of trend lines. So let me go ahead and remove this and show you what I'm talking about. Instead of calling it the Fibonacci speed resistance arcs, we call it the Fibonacci speed resistance fan. And as you can see the screenshot on the right-hand side, they're not arcs, they're trend lines. So it combines the trend line analysis with percent retracement analysis. And we're going to take a look at how this is drawn and some of the technicalities around this, okay? So lines are drawn based on percentages of the distance between the beginning and end of the trend line. We'll see that. And measures trend corrections, but also the speed of a trend. Can be used as support and resistance lines, and a break of a lower or higher line indicates a possible price movement to the higher or lower line. Let's take a look at that, and I'll explain what this PowerPoint slide is saying. Let me go back here to TradeStation. Let me go to the drawing menu, and let's go here to the Fibonacci speed resistance fan. This is the one that draws the little box with trend lines. And if you want to use the same example that we're talking about, let's go here to from this top all the way to this bottom. I want you guys to take a look at what's going on here, because what this does, it draws a box. You see the box right here. The lines are very thin, but it's still very visible. So it goes from 0 to 100. Divides the box in half. That is your 50% line. If you click and hold on the actual speed resistance fan, you can see the levels and the percentages. So you can see the blue line. The blue line is at 38.2%. The yellow line is at 50%, and the red line is at 61.8%. So this is measuring, retracement pretty much. You can see how there was a big downtrend, that's what we took as a measurement. That's where we drew from point A to point B. And then there was a retracement. The blue line is our 38.2%. It's drawn by this box, and the trend line is drawn from the very point A to where that horizontal line intersects the box. That's how the trend lines are drawn. Same for the 50% and the same for the 68%. Now take a look. I'm not sure if this is a coincidence, but take a look at the price activity of American Airlines. Do you see that it hit that 68% line right there, the 61.8 line, and it kind of bounced off of it, went down? So the idea here is, and that's the information that's also in the PDF, is that if it breaks one of the lines, it's likely that it will just go to the next one. But a lot of times these lines will also act as support and resistance lines for the price activity. Also, take a look at, yes, we went all the way down here. The price went into where the trend lines are. Take a look at where it bounced off of. It bounced off of that blue line, which is the 38.2 percentage level. Coincidence? Maybe. But it's valuable to look at. So that's exactly what we're trying to show here. Let's go ahead and take a look at another one. I know that I'm running out of time, but I just want to make sure that I include all the tools here. This is the last one, by the way. This is the Fibonacci cycles. I believe it's the last one. This is the one that draws time cycles following the same number sequence of the Fibonacci. So it uses vertical lines. Sorry. I shouldn't use the wheel on the mouse. It uses vertical lines representing Fibonacci time zones with the lines spaced at Fibonacci intervals of 1, 2, 3, 5, 8, 13, and so on. Used to look at significant changes in price in the proximity of the vertical lines. It is believed that the market frequently experiences a reversal in trend near these Fibonacci intervals. That's interesting. And there's always a value to be looking at these levels and see if something's about to happen. They're often drawn from significant highs or lows, and that's the end of my PowerPoint. How do we draw it on the TradeStation platform? Let's go here to TradeStation. we go to drawing Fibonacci cycles. Let's suppose that we draw it from this low. It only requires one click. So I click on this, and since they're vertical lines, they're not really attached to a specific price level. So just click on the candle, and what it'll do, it'll just draw these vertical lines based on the Fibonacci sequence, and you can see the numbers right there at the bottom, the 1, 2, 3, 5. Maybe at the very beginning, these lines are not as significant, but as you go along time, they become more significant, and maybe something's going to happen whenever the price activity reaches any of these time cycles. It's just an interesting concept. Now, you cannot adjust this time cycle because it follows the Fibonacci numbers one by one, the Fibonacci sequence. If you had more space to the right, we just continue on giving you more lines or more lines. Here we go. Here we have, let me push the chart here. I don't have more space to the right, but if I wanted to have more space to the right, let's do 500. You can see I'm already looking at, the 610 line, vertical line, based on the Fibonacci sequence. So this is all interesting concepts that I wanted everyone to, take some time and play around with and see if it's something that you can incorporate in your everyday trading. I think if a lot of people out there, a lot of traders are following this concept, I think it's worth giving this a try and see if it correlates with some market action and some major movement. Any drawing tool that you add, for example, let's say that you draw the price extensions. Okay, I'm going to go here from top to bottom, and then here to the top. If you want to move anything, of course, just grab it by the anchors, and you can recalculate anything. So it's very flexible. You'll notice that when you click, I'm sorry, the market just opened and it blasted in my ear. I'm going to click on this, and you'll see the anchor points are like little white boxes that you can click on to adjust the angle or adjust the trend line that you just drew. So feel free to customize any of these drawing tools as you draw them. All right, guys, this is the information that I had for you today. Hopefully, you can use those tools in TradeStation. If you have any questions, you're welcome to call our support team. If you want to join me in the Getting Started channel, it's a free webinar. We meet there every single Wednesday, and we open up the floor for any type of questions. So make sure you join me there. And if you're ready to take your TradeStation education to the next level, we have the TradeStation Masterclass also available. Both of these channels are hosted on youcantrade.com. So make sure you go to that website and check us out there. Okay. Thank you guys for your time, and I hope to see you in a future presentation. Goodbye, everyone. Great having you.